Welcome back to Tip TV Financial Education. My name's Charlie Burton. Today I'm interviewing an independent retail trader, James Booth. James is a member of the Society of Technical Analysts, or he was a member, and so we're going to find out a lot more about James and his trading experiences over the last 12 years right now. James, welcome to Tip TV Education.
Thank you for having me.
James, let's rewind the clock first of all and look at your history. How did you get involved in trading in the first place?
Well, it was interesting because for me it was actually on a long haul flight from the UK over to Central Africa, and I'd stopped off in the airport and bought Investing for Dummies, which I can't remember who the author was now, but it was a book to read. And I was always curious about what was happening with my pension, and it was a time when people weren't investing enough in pensions. They probably still aren't. And I wanted to know what was happening with my money and whether there's something I could do that would allow me to manage my money better. So it was a long haul flight, sat reading it, and by the end of the flight I decided when I get back to the UK I'm actually going to find out about trading. And for me, I always like to start sort of both feet jump straight in and have a good look around, see who's the best person to train me. And I thought, well, I actually came across the Society of Technical Analysts. And at that point in my life, I was actually relocating to London with work, which was really fortuitous for me because it meant that I could actually go and study with the STA. Mm-hmm. At that time, they were doing a Thursday night. It was an evening class at the London School of Economics. And I studied with them for about 9 months and then qualified with the STA and became a part of the member of the STA's organisation and used to travel into London to their meetings and things. But I always wanted to be a day trader. That was the thing. Once I started to learn about trading and learning about technical analysis for me, it was about getting into the day trading, and I liked the excitement. When you see a movie and it's always the buy, sell, that kind of excitement, the adrenaline rush, that's what I wanted to get involved with. So I was dead set on I was going to be a day trader, jump in and out of trades every few minutes and make my fortune. And that's really how I got into it, if you like, on that journey.
So wasn't there a problem then with the STA about that?
Well, the STA are very much an institution that likes to talk about long-term investments. Yeah. They like their point and figure, their Ichimoku clouds and so on. And so I did feel there was a little bit of a disconnect between their idea of whether you could make money day trading and people I knew that were like yourself that did make money day trading. So I think it came to that point where I realized it wasn't for me, and that I even though I'm qualified with them and had a great time with them from that point of view and learned loads about analysis.
Yeah, I bet.
From my point of view, I wanted to just disconnect and start to get to know people that actually did day trade. It's very difficult to learn to be a day trader if you're surrounded by people that don't believe in it as a way to earn a good income.
But there was a benefit from doing the STA exam. I know we're talking about back in 2006-07 back now. Yeah. But there was a benefit to it because weren't you offered a job on the back of it?
I was. I mean, the nice thing about it with the STA is, of course, you're on their register, so any jobs that come up in the city, you get offered to them. And I did go on an interview just after qualifying with them, and the whole interview was simply put a chart up on the screen and I had to explain how I would use technical analysis to decide where the market was going to go next. And it's dead simple. I just stripped everything back, went to 2 moving averages, some price action, support resistance levels, all the classic stuff. But by the time the interview had finished, they offered me the job on the spot. Brilliant. Which was fantastic for me.
So now the STA is probably now going to get a load of people applying for STA because they think they're going to get a job on the back. I think the world's changed a little bit now, but because that was with an analyst organisation who provided TA to banks and other institutions.
Yes. Yeah. So they would provide all the kind of information, just trade suggestions. That's the point.
So you would have been an analyst, not a trader, but you would have given them. And as I'm sure we'll talk about, there's a massive difference between being an analyst and a trader. Anyway.
Absolutely. A huge difference. I mean, it's one thing to analyse the markets with somebody else's money on the line, to when your money's actually on the line.
So what happened at that point then? So they offered you a job.
They did, and I would have taken the job, but life has a funny way of intervening, and we ended up actually not taking the job, some family situations, and we relocated out of London and back up to Warwickshire, which is where we live now, and I actually had to put trading and my whole dream of being involved in that whole institution on hold, and that was right around the time of the whole market crashing anyway, and what I thought would be a year out of the industry, and then I'd get back into it again when things had settled down with the family. actually ended up being sort of 5, 6, 7 years.
Yeah, life just gets in the way.
And life, as you say, gets in the way. But it's an exciting time for me now because I've got back into trading again. It was always there. I was always looking at charts. There's always been a screen open at home with somebody's chart on, whether it's gold or it's the Forex. I'd always be watching along with groups like EzeeTrader to see what they're doing, and knew eventually when things were at the right place, I'd get back into trading again.
And so, and the other thing you've done over the years, even though when you weren't trading, you've logged a lot of information, haven't you?
Oh, yes. Well, the thing about technical analysis, and my background is, and I work as an analyst professionally, so I literally logged thousands of trades for day trading at the time because that was my passion. And I worked out a methodology for recording the waves, the Elliott waves, where it's a 3-wave retracement, a 5-wave retracement, which essentially makes the flag patterns and pennants that we're familiar with if you're a pattern trader. How often you could trade a trade once the markets have rotated, and when they touch the moving average, the first touch of a 20 moving average, the probability of it breaking down, and then the second touch and the third touch. So I had stats on everything, really.
Brilliant.
Thousands of trades.
Still got to try and make money off those stats, though, haven't you?
And you do.
Yeah.
And that's the interesting thing, because there's a lot of lessons you can learn from that, especially when you think you're a good analyst and you've made your assumption on a decision about where you think the market's going to go and how you're going to manage it. And you've read the books. You know what you're supposed to do as a trader. But knowing what you're supposed to do as a trader and actually then doing it with your own money on the line, there was a few learning lessons along the way.
Well, this is brilliant because, I mean, I always say that there's a lot of good analysts out there, but they can't trade for toffee because the difference between being an analyst and being a trader is that up there. Unless you can sort that out, what's going on in the grey matter, you're never going to make money from being a trader. So yes, you can learn all of this or whatever strategies or whatever they are, but unless you work on your mindset, you'll never make that transition.
Oh yeah, I think one of the biggest lessons that I had to learn was I would analyze the market. But I would always second guess myself once I got into the trade, even though I knew where I'd looked at it and where I expected the market to go. The number of times I would second guess myself, the number of times I'd be in a position and think I needed to change it. And it was all to do with what was going on up here, the mindset of the trader. And that's all the technical analysis in the world won't make you profitable if you can't get that mindset right.
Let's talk about that then, just a little bit. So you say you would interfere or whatever with a trade. Give us an example. How do you actually go about interfering with a trade?
Well, I guess everybody who trades goes through this learning process, and we all have our own personal things that bug us. For me, it was, I love to move to break even. And I know loads of people out there who trade will love that because it feels safe. But for me, with day trading, it was always in the trade, break even, out of the trade. And that was just how I worked. And the thing with day trading as well is if you sat watching the screen, it's very fast. You always feel like you've got very tight stops. You've got an opportunity to get back in again. But when I was doing that and it felt right and I was getting back in the trades again and I was making some pips, when I'd done all the analysis and I would look back over 6 months of trading, without fail, I would always see that I would have made more money if I hadn't messed with the stops, if I'd left them where they were. But that is the most uncomfortable thing to do as a trader. And so I had a trading friend at the time, and we used to talk on Skype at the time we were in trades, and there was a phrase that we used to have, which was bum on hands. So that when you got in a trade, the first thing you had to do was literally just to put your bum on your hands, sit on your hands, and don't touch the trade. You've made your position. You know what you're doing. Wait for it to get where you're expecting it to go. Don't always go to break even. I
say this all the time to people that, the natural tendency for people is to get to that break even because they feel that they can then relax. Oh, I'm at break even now, I can't lose. Well, by not losing on that trade, you're effectively losing further down the line. Because you're going to get yourself stopped out at break even, makes you feel good right now, but that trade may have just come down that little bit and then shot off. You've missed out on a great winning trade, haven't you? Yeah. So net, you're, like you've said, much more profitable by sticking with the trade rather than always. There are times to move the stops, of course, but always getting that stop to break even too soon, too early, is you have to give it that room to breathe.
You have to learn to feel uncomfortable with, or be comfortable with the risk.
Yeah.
And that's something we deny ourselves when we move to break even all the time, is that we don't want to deal with the risk. We want to mitigate it by getting to break even. And the thing about that is, it was interesting as well when I was analysing all of the trades, because the other thing is, we like to win more often than we lose. And again, I looked at all of the trades, all the opportunities to go in, and we're talking, you know, over thousands of trades over months and months. And it was interesting that if the percentage of trades where I held the position longer, over that period, I made more money, but I would actually win less trades. And that was an interesting statistic.
Can we just take a break here, and we'll pick up on this just straight after the break. So we're just going to take a quick break here, and we'll be back with part 2 shortly.